Who decides that $1 is equivalent to 75 rupees? Is it RBI or is it the market forces? The foreign exchange rate is a very important determinant in the development of any economy. Foreign exchange rate means the rate of a domestic currency against a foreign currency. How does it matter? It matters to importers, it matters to exporters, it matters to investors who want to invest in India. It also matters to, let's say, tourists if I'm traveling to another country. How does it affect? Let's say I'm an exporter and I export this glove. The price of this glove in INR terms is rupees 50. My cost of raw material, my labor cost and all other expenses, everything I pay in INR, and that cost rupees 50. And I fix the selling price as $1. That is right now, let's say 79 rupees. But when my order is due, when my payment is due, at that time INR has become stronger. As a result, while I was getting 79 rupees for $1, I'm now getting 75 rupees for $1. So for an order of $10,000, if I was earlier getting 7,90,000, now I will get 7,50,000 rupees. That means 40,000 rupee of loss. Or I have an option of increasing the price, the selling price of my product. But that will make my product less competitive in the international market. On the other hand, if I'm an importer, say government, and I'm importing oil, I'm collecting my taxes, everything in INR, but the payment of oil is happening in dollars. In that case, even if rupee becomes weaker by just 1 rupee, so earlier $1 was equivalent to 79 rupees, now $1 is equivalent to 80 rupees, I'll have to pay 1 rupee extra for every dollar of oil. And these fluctuations will hamper my calculations. It will be bad for the economy. It will affect everyone. So what do we do? What is the solution for that? One easy way is that RBI fixes the rate of INR and it remains same. No one can change it. We have tried that. In 1947, our INR was pegged to the value of gold. Our INR was pegged to 4.15 grain of fine gold. We devaluated it in 1949. It was devalued so that our rupee was pegged to 2.88, and then in 1966 it was pegged to 1.8 grams of gold. Then in 1971, the Bretton Woods Summit, the agreement was broken by US. So what was Bretton Woods Agreement? It was signed in 1944, immediately after the Second World War, before our independence. Bretton Woods is a city in USA in which many countries, 44 countries came together. World Bank and IMF was formed. The purpose of Bretton Woods was to have a more efficient foreign exchange economy and also to reduce the wrong devaluation of the respective currencies, to make your exporter more competitive, those kind of things, and overall development of international economy. As a result, US government said that you value your currencies against my currency, and US dollar will be convertible to the actual physical gold. In 1971, the US President, Mr. Richard Nixon, he declared, I break that promise. US dollar is no longer convertible to gold. So in 1971 to 75, we pegged our INR directly to the value of pound because of our historic ties with UK and everything. 1975, we said pegging the value of my currency to some other external benchmark, that is one single currency, is very risky. So 1975, we pegged the value of rupee to a basket of currencies. What were those currencies? What was the weightage of each currency in that basket? That's something that RBI said we'll keep confidential so that there is no speculation in those currencies, because our INR is pegged on that. It worked, but then in 1980s and early 90s, we faced severe foreign exchange crisis. Our current account deficit, that means the difference between the value of our imports and the money we got from export, had increased to almost 3% of our GDP. Our foreign exchange reserves had fallen to just about $1 billion. Just to put things in perspective, in the financial year 21-22, our foreign exchange reserves were $607 billion US dollars. So $607 billion versus $1 billion in 1991. So we knew something had to be done. One thing that government did immediately was devalue the currency, because RBI knew which were those currencies we were pegged to, and RBI said that the value of my rupee was so and so. So it was a fixed rate regime, as we call it. It was devaluated to the extent of 19% to 20%. So for example, in the beginning of July, it was $1 was equivalent to 21 rupees. In the next 3-4 days, it fell to 26 rupees. So $1 was equivalent to 26 rupees in a matter of 3-4 days. It helped because India became an attractive investment destination for a lot of financial international investors. You know, if they were sending $1 lakh, that would get converted to 21 rupees, and that will be 21 lakh rupees, and they'll only be able to buy goods worth or companies worth 21 lakh rupees in India. But now when they sent $1 lakh, they got 26 lakh rupees. So more money in hand, more assets they could buy. So India, in a way, became a more attractive investment destinations. Our exports became more competitive, and all those things happened. As a result, we are today very comfortable in our foreign exchange. But that was just a beginning. There was a committee of RBI, which is called as Rangarajan Committee. He said that RBI has to move from a fixed rate economy to a floating rate economy. In a floating rate economy, the value of the domestic currency is pegged to the demand and supply. It is decided by the market forces. It is not decided by RBI. However, RBI makes policies in such a way that there is an orderly development of the foreign exchange market. For orderly development, there should not be too much speculation. There should not be too much volatility in a particular market. So, in case RBI feels that it is very volatile, it may step in by buying foreign currency or selling foreign currency directly by RBI or through a public sector bank. RBI has introduced many instruments such as forward and swaps, which are traditional instruments. There are many things such as derivatives products in rupee which have been allowed by RBI. Having said that, rupee is still not fully convertible because there is a limit to how much we can send outside India and how much can be brought in India in the form of FDI. FDI is not fully open for everyone. Also, if I want to borrow funds from abroad in the form of ECB, external commercial borrowing, there is still a limit to how much I can borrow. Keep watching this space for more updates on the forex market, banking and the finance topics. And do not forget to subscribe to my channel, Ruhi's Learning. Thank you and see you tomorrow.